Hi, I'm Zach Doran, and today I have Joe Cannon, Vice President of Government Relations for OADA, with me, and we're going to talk a little bit about the state budget. Joe, right now the budget debate's in full swing, but we've actually got some good news to report.
We do. Good news, Zach, coming out of the House of Representatives this week. The House Majority Caucus made some positive changes to the bill late yesterday in committee that'll be very helpful to us.
There were largely 5 items that were impacting dealers in this proposed version of the state budget. The first being the increase in the commercial activities tax by 23%. The second being a cap on the vendor's discount, which is the amount of money a dealer retains for collecting and remitting sales tax to the state.
In addition to those two, Zach, one of the big ones was the proposal to expand the sales tax to a number of different services that dealers use, and examples of those would be accounting and legal services, for example, and arguably even our advertising too. And in addition to that, we also had the sales tax rate increase for a half a point on the state portion of the sales tax. And last but certainly not least, the proposal also had an impact on the trade-in credit. If you recall, Zach, the proposal was to reduce the trade-in credit to 50% of the trade value.
Okay. In order to determine all this and how it impacted dealers, the first thing we did was gather information.
Exactly, because the key to the legislative process is you have to have credibility, and credibility comes with accurate data. And as you know, we surveyed the membership, really asked for just a few numbers. One was the gross receipts. Obviously, the vendor discount came into play as well, and also on the income side, too, to try to compare the benefits of the income tax reduction versus the cons of the tax increases.
Really appreciate all the members' support for who responded to that survey and gave us good information. After we assessed that data, we did a number of things.
We did. Well, first of all, the data came back as expected. Very large impact, not only on our bottom line, but also on our customers, on our sales, as it relates to the sales tax increase and the trade-in credit reduction. So what we did was go to our manual, and that is to energize the dealers. We testified in both chambers, both in the House and the Senate, but also facilitated dealer contact with key legislators hearing the bill, as well as meetings around the state. And as you know, Zach, we used our Metro Association executives were very helpful in getting those meetings together. We were part of a coalition of other business groups that had similar concerns with the proposal, and one of the unique things we did too was engage our manufacturers. At times in the legislative process we're at different sides of the equation, but in this case they agreed that the trade-in credit reduction was a big issue, and they engaged as well.
One of the other things we did is our next-gen dealers came to the State House and were very helpful. I think we had something like 20 next-gen dealers and 35 plus meetings that you set up for us, and energized the legislature that way with those dealers. They did a great job.
They did. They left a lasting impression too, because it's very easy for us to talk to legislators on a regular basis, but when they hear from the boys and girls back home, it's a much bigger impact.
Okay. Now, Joe, you mentioned that we had some positive response from the House on the budget debate after all of our efforts, dealers included. Can you talk a little bit about the response?
Yes, very good response. Late yesterday in the House Finance Committee, the House unveiled its version of the proposal, the response, if you will, to the governor's proposal, and very pleased that they took out all the tax increases. So what isn't in the proposal is there is no CAT increase, there is no sales tax increase, there's no expansion on the sales tax to services. The reduction on the trade-in credit was taken out as well, so the full credit is retained. And the vendor discount remains the same, 0.75% with no cap.
Capped.
Correct.
Okay.
Correct.
What's the game plan now? Because those are a lot of the key issues for us. Now the bill goes over to the Senate.
Correct. Actually, the committee will move the bill next week, and then late next week the full House will vote on it, and then it will be sent over to the Senate for another start of the debate. So we're at halftime now, so dealers really need to remain vigilant and wait on direction from us in terms of communication with their senators. The other issue too, Zach, that we want to emphasize too is what the House did was also create a across-the-board income tax cut too, which is high on the governor's list. They also made permanent the 75% deduction for pass-through entities on the first $250,000 in business income. So we're very pleased that the House was able to do the income tax cuts using existing resources and not having to move to tax increases.
Right. Well, stay tuned for more correspondence from us, and if there's any questions, feel free to reach out to us as well, and we'd be happy to try to answer those. Thanks for your support.